from the United States Capitol's Congressional Auditorium in Washington, D.C., the Government Blockchain Association presents The Future of Money, Governance, and the Law.
So thank you so much for having us here today. My name is Shawnna Hoffman-Childress, and I am the chair of the CFTC's Distributed Ledger Committee. So it's been an interesting past 2 years as we've seen blockchain in its trajectory literally to affect every human on this planet, in my opinion. So we have an amazing opportunity to protect not only our people, but our community, and then also our property through the use of blockchain. I have three amazing panelists here with me today who are experts in each of those areas. One of them is an economist, the other one is an expert in cybercrime, and we also have an expert in finance. And so with their viewpoints today, I think you're going to get a lot of information out of this panel. We are going to try to save at least a little over 5 minutes at the end for questions, so keep on thinking of those, and then we are very happy for the rest of the day to stay around and answer those questions. You know, I'd love to start with James here on the end and talk a little bit about his background. So James is a senior security analyst for the Alabama Security Commission. In this role, he utilizes data analytics to coordinate multi-jurisdictional investigations, trains law enforcement officers at various levels on digital and financial investigations, and briefs stakeholders at all levels on issues related to cybersecurity and data analytics. James holds a master's degree in cybersecurity and information assurance, bachelor's degrees in finance and economics, and the designations of certified ethical hacker, love that one by the way, certified fraud examiner, certified computer hacking forensic investigator. He is currently pursuing the designations of certified data scientist and certified big data architect. He is elected to the board of directors for the Birmingham chapter of the InfraGard, appointed to co-chair of the Investment Advisor Cybersecurity and Technology Project Group of the North America Security Administration Association, the other NASA, and selected as the chair of the Financial Regulatory Compliance section of our very own GBA. And next to him, we have Nadeem Ansari. So Nadeem is the co-founder and CEO of Forcewave, a minority-owned hub-zone business headquartered in Quantico, Virginia. He is an executive MBA from George Mason University and has worked in functional finance, software development, and government contracting. He is a proponent of blockchain solutions across all aspects of government and industry. He's interested in developing solutions to protect people and their assets. He and his team are currently developing 3 blockchain products, the first in acquisition management, the second in medical tourism, and the last in crypto lending pricing engine. So, and to his right, we have Dr. Maurice Kuglar. So Dr. Kuglar is a professor of public policy in the Schar School of Policy and Government at George Mason University, with research expertise on economic impacts of emerging technologies, labor productivity, human capital formation, and on the role of technology diffusion for catch-up growth. His work encompasses analysis of international finance markets, global labor markets, foreign direct investment, global value chains, and international migration. Kuglar was head of research of the Human Development Report, the UN's annual flagship publication on international economic development, after he was senior economist at the World Bank. Prior, he was visiting professor of the public policy at the Harvard Kennedy School of Government and Research, fellow at the Growth Lab of the Center for International Development. This research has been widely recognized through grants and also prizes. He earned his PhD in economics at UC Berkeley. And I am very excited to really hear more from them today. So James, I'd love to start out with you and talk a little bit about how technology can affect the protection of our people.
Yeah, so I'd also like to start by thanking my bosses for allowing me to be here today, Director Joseph Borg and Chief Deputy Director Amanda Sin of the Alabama Securities Commission. I'm also the only person here from a law enforcement agency, so that's made me very popular at all the networking breaks. Everyone turns and walks away as soon as I say that. So protecting people, I think, especially from the law enforcement perspective, I'm not a sworn law enforcement agent, but I work for a law enforcement agency as an analyst. So we use programs such as one being Clearview AI, which is a law enforcement only AI perspective or program that you can use to run people's images. It's essentially a reverse image search to pull online presence for individuals and subjects of investigations. And so that is currently, to my knowledge, in a single database. And so that's one example of if that was in a blockchain sphere, you wouldn't have that single point of failure, and it would be better protecting not only for the general public, but then also for the individuals and the PII that's in that database.
So, and then in regards to, I know you were telling us some of the stories in the back in regards to protecting other ways of protecting people through the use of technology. Do you have a couple more stories that you'd like to share with the group here?
Oh, yeah, absolutely.
Yeah.
So, being with the Alabama Securities Commission, we're the boots on the ground for financial regulation in the state of Alabama. And so through that, we're a member of the North American Securities Administrators, or NASA, with two A's, the other NASA. And so NASA has a program called Operation Crypto Sweep, which we've been very active in the state of Alabama, but across the country in enforcing ICOs and cryptocurrency regulations and those applications with blockchain. And so through that, we found very apparently fraudulent offerings, one being they used Ruth Bader Ginsburg, her image, as their chief ethics officer for the company, which I highly doubt was legitimate. We've also seen some that Jennifer Aniston was the founding father of. One even featured Vladimir Putin with the shirtless horse pic that was very famous a few years ago. So protecting people and your individual investors, as well as preserving legitimate markets and legitimate initial coin offerings and IEOs and STOs, those offerings, because they're diluted by the fraudulent actors, obviously, so preserving those as well.
And what type of training, I know that you're very involved in training other officers, what type of training are officers getting at this point, and where do you see things going in the next few years?
So I'm involved a lot in the open source intelligence, digital analytics investigations, and tools that civilians can use, not just law enforcement officers. So one great virtual machine that's fully configured that I always recommend is Bouscador. The creators of that no longer update that operating system, but it's fully equipped for those of us that aren't great at coding. I can stumble through it, but that's not my specialty. So you don't have to be familiar with all the Python and R and SQL. It's all pre-programmed for you, so it's a great resource for your law enforcement officers and investigators that aren't familiar with coding.
So Nadeem, I'd love to move on to you and talk about property. So how can we protect our property through the use of technology?
Well, a couple of points came into mind. Like when you look at the history of different aspects of property cases against people when a disaster occurs, a massive migration occurs, a war occurs, and you have components of the burden of proof upon the individual to say that, hey, this was my property before this disaster occurred, or this was my artifact or something that belonged to my family. And in that case, a couple of things come to mind is that I know most of the day we've been talking about trust, but there's also a second aspect to a strong relationship with government. It's not just trust, it's also the communication of that trust. And that consistent back and forth is why cryptography has been so successful in helping wield those transactions together. And if that trust is broken, in a lot of cases you see that one party or the other party can exploit the transaction, or even a third party can come in between and exploit that transaction. And I guess the key to governance of protecting property, especially when the records are held by that third party, which is usually the government. One person sells a house, another one buys a house, and it's the government that's in between that, to ensure that there's lubrication between the gears to make sure that those transactions go faster and smoother because they trust that third party. However, we're fine, just throughout history, if you look, this is a Pew Research poll that tells how much Americans currently trust or don't trust government at this point. And as you can see, the numbers are kind of astounding. And it's not something, so this is, you're talking about a year or two ago, I think it's December of 2018. So 14 months ago, this is what the data looks like as far as, how do we trust that third party between, two individuals and their transactions. And it doesn't look like they trust that party very much at all. And then when it's in the case of having a transaction with that party itself, people, and I think previous panelists and some folks in the audience, through networking have kind of voiced that, they have an issue with understanding, like how much they can or can't trust government. And, one example is civil forfeiture, where you're talking about somebody, going to buy a car and they've got $10,000 in cash on them, and they're going to go buy a car in Florida. They're driving down from Virginia. They get pulled over for speeding, and they see an exorbitant amount of cash, and they're saying, hey, I've got email address. Well, we're going to confiscate that cash, and now there's a case against the cash itself, not against you, and now you've got to spend money to go get back your property. So those are examples of where these things come up. But I'll go to some older examples. But as a breakdown of where in the spectrum of trust is important, Pew came up with the low trusters, the medium trusters, and the high trusters. And the most interesting thing that you'll see on this chart is the level of disparity by industry and by functional area. So can anyone guess where elected officials are? Right? And then you go all the way up to scientists, right? And even with scientists, you have disparities in different aspects of how they show data. So, they say there's lies, there's damn lies, and then there's statistics, right? And that's kind of where the top tier comes in. So there's an interesting, understanding of how that trust is constantly challenged, throughout all types of transactions. And so the mid-1990s, I go back to this example. I worked for Cravath, Swaine & Moore early in my career. I was a legal proofreader on the midnight shift. It's a very famous old school law firm. They actually did the deal for Alaska, and they had a letter from Abe Lincoln thanking them. And I remember sitting proofreading some documents where Holocaust victims' relatives were trying to make claims on the bank accounts that they opened up during wartime to leave to their family members or for themselves once they got out of Nazi Germany. And they were denied. They were denied by the very banking institutions that were supposed to safeguard their property. And their inheritors had to fight lawsuits to get them. Then you have the Bank of Cyprus, where the depositors lost 47.5% of their savings. That was only 6 years ago. I was actually at Oxford in the UK on a rotation with my MBA program, and they showed news articles of bulldozers getting in front of Cypriot banks because they didn't want to draw on the. I guess it's moving by light, right? Don't know why. And that's not one of mine, so I'm not sure where that came from. But these are clear-cut examples where these things are coming up on a constant basis. And the question is, how much is government obliged to protect people's property? And how much is government involved in the negligence of the protection of that property? And can it do something, or can the technology facilitate government to do so? And on an earlier panel, I see the gentleman here who was talking about title and land, and the 3,400 counties across the U.S. and how difficult those transactions are. Well, I worked in the mortgage industry, and I remember, doing searches on titles that closed, but we never got the trailing documents back to the bank. So if those mortgage payments were missed for 6 months, the bank had no claim on a foreclosure for those properties. And that's where the robo-signing controversy came up. So there's a lot of examples of abuses in both directions. And the key thing is that without having some level of governance, some level of trust, some level of communication, the corruptibility is, can skyrocket in any direction. And regulators like some of the gentlemen, James on the panel, they're stuck with a really difficult task of trying to decipher what exactly happened and where the trust broke. And that, actually holds up business. It actually stifles the ability, because then you have more regulation coming in. And, if I take a survey in the room, most people say, we hate regulation, we want transactions to move smoother. And then other people are going to say, well, we need regulations because abuses occurred. And, if those things are not met to a certain par, people are left unprotected. Now, throughout history, there were three other examples that I want to share kind of briefly. One was in 1907, we had the San Francisco earthquake. 1908, I believe, was an earthquake. And there was a land dispute during that earthquake. And a gentleman, sued for the fact that his building was being sold, and, he never collected the funds for the building because the earthquake occurred, and the person who owed the funds for the building said, well, there was no building, and you can't prove it. And that was the first time a photograph was used to prove that that property existed, and the court case, went in favor of the seller of that property. Then you fast forward, we talked about the Holocaust. My heritage is from South Asia, and my parents were both born in what's today still India. And then the British Empire pulled out in 1947 and formed, the country of Pakistan formed. And in that, my wife's grandmother tells us a story of where they literally took everything that they could grab and jumped on trains that were going in both directions into both countries and showed up at a place, and the new government of Pakistan and the existing government of India said, whatever you owned in the old country, we'll ensure that you get an equal or similar setup in the new country. And you can imagine the level of fraud that went on in those cases. So then you fast forward to Syria, and you talk about the security concerns for host countries taking on refugees. You talk about the concerns of, like what you have right now with the coronavirus, which is, new and, very relevant. How do you know, from a government standpoint, who to accept, who to quarantine, who to reject, in those circumstances without some kind of a trust document that's not just housed in that central government? That's something that's kind of decentralized and that you can use to facilitate, better management of protecting people and their property. And finally, we get to a time where, we were looking at a potential world war about 5 weeks ago with what happened in the Middle East. Now, if everybody in this room jumped up and said, there's about to be a nuke that's going to hit Washington, D.C., how quickly could you communicate to your relatives, find a way back home, ensure that your property is protected, ensure that your family is protected, ensure that all of these things could happen? Probably not very likely. However, if that incident, God forbid, did occur, the aftermath would be quite different if things were at least, housed on a blockchain somewhere in the world, and someone who survived could reconstruct where things were to a normal semblance, before that incident. And that's kind of where our focus has been, in developing solutions, or what we wanted to share with the government body here at today's conference.
Yeah, that is an excellent point.
Thanks.
And definitely one very valid for today, as we're all, I know, concerned about the coronavirus continuing to move forward. So Maurice, I know you're going to be covering for us how to protect our communities. Go ahead.
That's not my presentation.
Okay, there you go. Yes, thank you very much.
Hi, so I'll come to a more macro level in terms of addressing issues related to the activities of global criminal networks, obviously related to security. Money laundering might seem like a techno-finance arcane issue, but it's really one that pertains to all of us, because money laundering is a crucial step in the activities of criminal networks that undertake heinous activities such as child pornography, human trafficking, narcotics, and so on. So it's relevant to all of us, I believe. And essentially, I want to share with you some research undertaken with some colleagues at George Mason University from computer science and the business school, experts both in cryptocurrencies. And essentially, DHS asked us to ascertain to what extent there is crypto money laundering. So actually, my title should have a question mark there at the end, because they have the sense that there is a lot of money laundering happening in cryptocurrency markets. But I, as an economist, have some doubts about whether that's actually the case. So the first step I recommended was to actually do an estimate as to whether this is a real problem and what's the extent of it. And if it is, then use some probabilistic tools that we can develop using heuristic clustering and machine learning to see whether, when we look at transaction histories in cryptocurrency markets, we can detect that there is a high risk of money laundering. So as I said, this is joint work with colleagues at George Mason in finance and cryptography. And in terms of types of financial crime, there are several. Money laundering tends to be the last step. And in the context of this discussion, the large question is, what would be the method to go from crypto to fiat? And is that really something that would make sense for an organization of criminals engaged in money laundering? And so this is a Venn diagram with the different types of money that you would have in a market. But my sense, and coming back to the last panel, when Thomas Cox was talking about someone with a dysfunctional boss, would you want that person to have blockchain, something that trails the activities of everyone in a distributed ledger so that it's out there for all to see? Well, the money launderers would be sort of like that person who has a dysfunctional boss. You don't want the whole trail of crumbs of everything that you do to be widely available, because it could come to haunt you. So that's my point of view as an economist. We know there is a lot of money laundering. The estimates are very imprecise. They range from 2 to 5% of global GDP, but let me be very clear, that's a lower bound, because that's based on what we can detect. And my own reading is that the money launderers who are getting caught are not the brightest ones. The really good ones, we don't know how much they're money laundering, and they're doing things that we're not able to detect. So that's a lower bound for sure. So in terms of the stages of money laundering, first there is revenue from a criminal activity. Then you reconvert those revenues into assets which you want to position in a way that eventually you want to bring back into the mainstream market. So that's the placement, and then the layering is about like how do you dissect and sort of convert into a portfolio that is untraceable all these assets, and finally you have integration. In our particular case of interest, it would be going from crypto to fiat. But there is an important aspect that I think bears consideration. We usually talk about cryptocurrencies as though they offer anonymity. And that's not exactly true. They offer pseudonymity, which is very different, because you have an address, which is a long string of characters. But if at some point, through crumbs left out there on the web or some other method, someone manages to link your identity to that address, then the ledger will have all the information. And if you are a money launderer, why would you want to use a system that has that feature? It's an open question. There is some anecdotal early evidence that yes, individuals engaged in illegal activities have used Bitcoin widely. Again, I'm not persuaded they are the brightest users of cryptocurrencies, but that's what they have done. So the concept is basically that you have a unique address, you have the consensus algorithm, you bypass a central certification from a central bank, most likely. And the open question is, how private is Bitcoin? So there are all sorts of entrepreneurs who have offered services through tumblers and other such applications that enhance the ability to have more privacy. And these are, again, they are pseudonyms. So let's remember there is no anonymity, there is pseudonymity. They are two very different things. And in terms of the Bitcoin privacy problem, the issue is that the transaction must reference some previous transaction. And one thing that people who don't want to be traced have done is to use several addresses. So even though it's the same individual in the transaction, there are multiple addresses. It's that person down there on the right-hand side corner. And they're hard to catch. So there is a big effort to work on the anonymization of Bitcoin users precisely to be able to detect the extent to which some of them might be engaged in illegal activities. We're working with one of them. It's the Blockchain Intelligence Group. And we are looking at specifically blockchain-based currencies, Bitcoin and Ethereum. And so the main takeaways of this research that will last for 2 years, it's just starting, is that we really need to get a sense of what's the extent of the problem, so measure that lower bound. And if we find it to be above a certain threshold, sufficiently large, let's say 2 to 5% of GDP, then going to the development of probabilistic tools that rely on big data and machine learning and heuristic clustering. So my main take is that this is an important part of the research about blockchain, but I personally believe from my interaction with people working in emerging markets that blockchain actually has great upside in terms of helping in many areas, such as titling, fintech, energy grids, global value chains, and that's another area of research that I think we should look into to have a more balanced view of the blockchain.
Absolutely.
Thanks.
Well, and these were great examples of how to protect your property, our people, and also our communities with blockchain. Now, I would love to open it up to the floor because the most important thing is that you walk out of here with your questions answered, but also can take what you've learned here back to your own communities. My father always said growing up, he said, go to your backyard first. So who can you help in your own community protect the people, protect the property, protecting your community as we each take a step forward in this brave new world of the fourth industrial revolution. So is there anyone who would like to start with a question? Excellent. Do we have someone who can assist with?
Thank you very much. I'm Maurice. I have a little subject matter name, but I'm also the governance ETF at LMG co-chair. So I'm here listening to blockchain. And what I'm really interested in, I haven't heard a term used today, is algorithmic regulation. I haven't heard the term semantic data. intelligence. That's all driving what goes into AI, machine learning models. I'd like to address some of those terms and use them.
Is there any of our illustrious panelists who would like to take a dive into that?
So at the Securities Commission, we deal with algorithmic trading in particular because we regulate the financial markets. So we've seen that they're deemed Robo Advisors, so investment advisors that use algorithms to trade individual portfolios. And so there's obviously, we talked about this yesterday at dinner actually, Scott, Radhika, Jordan, and I, about their new book, which I actually bought after our conversation. So plug for them, shameless plug.
Okay, wait, you can stand up real quick.
Oh, yeah.
They wrote a very cool new book. Stand up. Turn around. Talk to them afterwards. They've done a lot of research.
Yeah, I learned a lot just in our conversation. No, absolutely. They earned it. And so in that, we've seen, not only security of the algorithm itself, but then security of the underlying transactions, because you want to secure that PII and that business intelligence of the algorithm itself, but then you want to make sure the individual investors who are subject to that algorithm are protected as well. So balancing that is something we definitely address at the Securities Commission.
So this question is mostly for you at NASA. So there's a lot of conversation right now around quantum computing and Google claiming that they achieved quantum supremacy. So what do you think are the implications of that with the blockchain and protecting our data? And are there things that in your world we're doing in order to protect ourselves from it?
So obviously my opinions are my own and not my employer's. Got to plug that before I answer that question. So we focus on the security of data through, I'm trying to think of a good way to answer this question, I'm sorry. So, do you want to?
Yeah. So quantum computing. So I do work at IBM also. And it's one of my favorite topics to talk about. So I guess that's fascinating that you're interested in quantum computing at this point. There's been a huge battle between IBM and Google in regards to who's developed supremacy. Honestly, I'm just going to say, who cares? Because it is the coolest, newest technology that will speed up. Because instead of using chips, now we're surpassed it in using atoms. So we clearly have no idea what the future holds. And blockchain is going to be a tremendous importance to us moving forward because it's going to allow us that traceability and transparency, but then we know where all the data is. You know, we're embarking onto kind of that next level of IoT devices. We just surpassed 23 billion IoT devices. We weren't supposed to do that till 2023. By 2025, they're saying now over 75 billion connected devices. There is no way we're going to be able to have any sort of traceability without blockchain. And then, of course, the importance of artificial intelligence. I'll chat with you about that later. I know it's not quite an AI conference, but we can dig in and have a super geeky conversation. But in regards to quantum computing, we don't even have a clue what we're about to uncover. But those are kind of the trifecta of the three, blockchain, AI, and quantum, that I think are going to fully transform the world by 2030. Yeah. One more question? Is that okay?
Hi. Sorry, I came late, but I was kind of following a bits of conversation outside. Do you really think the current protocol infrastructure of blockchain could be closed, open, public, non-public, delegated, non-delegated, doesn't matter, but the evolution of that would sustain security that's going to come with quantum security? So I know immutability is drummed up a lot in the current context. So data, privacy, ownership are three different subjects altogether, and then we tend to use that, mix it up all up in the blockchain conversation very loosely, right? But in terms of actual implementation layer, if I'm building a brand new supply chain infrastructure, does it even withstand the immutability of a quantum security layer right now that we're already looking at? Yeah. In fact, there are a couple of companies that offer quantum security and communications at this juncture, not so much the computing side, the supercomputer. and blockchain pales in front of that. So I would love to have your input on that.
Well, and just real quickly on that, quantum encryption, we can talk a little bit later on that. I was just in Taiwan advising the Ministry of Justice there, and that was the number one thing we discussed was the quantum encryption. So we really have to think about our data as a whole. Absolutely, blockchain is important, but we have to be cognizant of the security. So looking at quantum encryption, looking at our AI, really the issues that I've seen with blockchain in general, we've built a lot of blockchains at IBM, and the issues are the in and the out. Where's your data being stored? Is your data lake secure? Is your cloud secure? I don't want to take away time from everyone else here, but does anyone else have anything you'd like to kind of go down that direction? Yeah. Oh, okay. Is that okay?
We have only 2 minutes left for this segment, so if you can articulate it quickly.
One thing you should realize is when you throw a word quantum, 5G, security, identification, chip, you should be mindful. Blockchain could be agnostic. It could be agnostic of the speed. Nobody's talking about that. It's very easy to follow the trend and write and talk about it. But be mindful of when you say, oh, we need 5G. Cybersecurity, he talked about. Somebody talk about policy, regulation. So to me, when you talk about blockchain, is a paradigm shift and concept of doing business. When you talk about the speed, operation technology, product technology, transformation of the encryption, chip encryption, or saying, oh, is a company does encryption, blockchain ID? Yes, they do, Cambridge Analytics. But you know what? Those products you are mentioning and bringing up, they're in very early stage. Encryption and quantum is done on crystal. You can move it a little bit. It's going to go nowhere. So I think you should understand the blockchain when you talk about is a product and a paradigm shift that could be agnostic of the operation technology. So that was an answer.
Okay. Very good. Thank you very much.
Thank you very much. Thank you to the panelists for coming.